The Japanese yen has weakened to 156 against the US dollar on Friday. That's after the BOJ left interest rates unchanged in Japan. The benchmark policy rate stood at a range between 0% and 0.1% as expected. The bank said it will continue to conduct bond purchases in line with a March decision. Now, Tokyo's headline inflation rate for April came in at 1.8%, slowing from the 2.6% in March. Core inflation in Tokyo as well fell to 1.6% from March's 2.4%, missing expectations of 2.2%. And that's important as the inflation in the capital is often viewed as an indicator of nationwide trends. Meanwhile, the Nikkei is up 0.9%, Shanghai Composite 0.8% as well, in what seems to be a very good day for Asian stocks. And now let's bring in Nadia El-Bilassi, who is Equity Group's market analyst, and she joins us now live from Dubai. Great to be with you this morning, Nadia. So Japan is dealing with inflation rates hovering around 1, maximum 2%. Why the structural difference in Japan when compared to several economies such as the US economy or Europeans economy?
Well, inflation in Japan is the product of policy changes, or the policy. It's quite different than other economies. Their policy rate and the structure of it is what keeps inflation in Japan so low, because they have low wages and they have government initiatives to keep inflation at a low level, especially when they have a negative policy interest rate. I mean, we saw them raise interest rates for the first time in 17 years. And I think the policy of having interest rates below 0% for 6 years and a negative rate at negative 0.1 is what keeps demand also low in Japan, and it's what fuels low consumption rates, low personal consumption, low wages, low spending, and therefore low inflation.
Interesting. And Nadia, do you think energy prices, have they been supporting this at all? We've seen energy prices oil prices hovering around $85 a barrel, although Oxford Economics yesterday said they expect oil and gas prices to come down a little in the near future. Do you agree? And what sort of impact will that have on inflation around the world?
I agree that oil prices could see lows on the de-escalation of geopolitical tensions. The more these tensions de-escalate, then the more we're likely to see Brent and WTI below the $80 handle. This is the major factor right now. And also, from another point, we still have sticky inflation, persistent inflation, especially in the US, and that's kind of going to impact oil prices as well. It's going to impact inflation and definitely the interest rate policy that differs in the US at 5.25%, and the major gap that it has with Japan at 0.1%.
Interesting. For the BOJ, what sort of trajectory do you expect now, given that core inflation stands at 1.6%?
I think the BOJ is definitely going to intervene with the yen at 156 for the USD JPY pair. This is a tricky situation. We've seen that the more that the yen drops and the USD JPY pair hits a 150 level, usually they intervene, and they've done that historically a couple of times where the yen was boosted due to these interventions. So now investors and us, we're just cautious to see an intervention after the 150 handle, but now we're at 156, so we're just growing more cautious, but we are expecting a BOJ intervention soon.
Nadia El-Bilassi, thank you very much for your analysis.
Thank you so much.